What's up, you guys? Today we're going to be talking about swing trading. Swing trading is basically holding a stock for about a month to 3 months and trying to get profit out of that position. I'm going to be talking to you guys about strategies that you can use exactly if you want to swing trade successfully. I'm going to show you guys my tactics of everything I do when it comes to swing trading. This is not day trading where you get in and out of a position in just this one day. This is more like a 1 to 3 month type of trade you want to take. It's very good for beginners and intermediate investors, and something that you can actually do if you have a full-time job as well. All I ask of you, just take 5 seconds of your time, hit that like button below. We're trying to hit 10K subs by the end of this year, so if you're new to this channel, please make sure to subscribe. I'm going to go on the computer now to show you guys my strategies when it comes to swing trading. So as of last video, I mentioned that we are still bullish in the market. I'm going to go here to the S&P 500. And I did mention until those moving averages cross, I wasn't going to be bearish in the market, just because the Feds are so invested in the market currently that for them to let it just tank again, I just find it very unlikely. Unless we get very much a second wave and they're forced to shut down the economy again, then I would personally think that we would see a tank in the market. But as of right now, I'm still bullish in the market, and we did see a very big pullback as of last week and a little bit of on Monday, but it was very expected. Now we can see here the RSI showing that we are oversold, and we are pulling back very hard today. We're climbing back up. We're already up. The SPY is up 2% on the day, and I personally think we're going to start grinding up slowly, little by little, for the weeks to come, until we are overbought again, and then we'll probably see a pullback. I do think we'll probably see this 339 level again. We might hit it, have a little pullback, and then start making higher highs for the S&P 500. Of course, everything goes day by day. You know, we have to see how the economy is. When making videos, news does change, you know, but as of right now, currently I am bullish on the market. And if you wanted to take long-term swing trades, then I'm gonna show you guys my strategies for that. So let's go here to show you guys some tools that I personally use if you want to swing trade. What I like to use, I'm going to show you guys actually Norwegian Cruise Line here. So Norwegian Cruise Line, with this whole pandemic here, there's pretty much 3 tools that I really like to use when it comes to swing trading. So the first one I'm going to explain to you here. Let me get rid of all this for you. Clear drawing set. Okay. We're going to put studies. Okay. Apply. Okay. So, what strategy that I personally like to use is the Fibonacci tool. This is really good for a lot of beginner traders that want to trade in the stock market. When it comes to day trading, a lot of people will sell you pipe dreams of how you can make a killing on day trading, but it's a career. You have to take the time if you want to learn how to day trade. When it comes to swing trading and long-term investing, it's a lot easier for beginners to start making profits from that. So what I would suggest is maybe get into swing trading, maybe do some long-term investing before you get into day trading. Swing trading is a great way how you can make profits and how you can cut your losses quickly without having to monitor your trades daily. So we're going to go here, and I'm going to show you guys the Fibonacci tool. So this is the platform Thinkorswim. It's a free platform that you can use. You can even paper trade, which allows you to have basically fake money, so you can pretend like you're buying in the stock market. You can use it just to get more familiar with the whole platform, and then once you're more invested into it, then you can start adding to your portfolio, so you can start investing. So here, if you click on the middle pad of your mouse, and you can click here to this % sign, this is the Fibonacci tool, and this, what it does is allows you to kind of see, a lot of traders use this. I personally like to use this a lot, because for some stocks it really works very well. You can see a pattern, and you can see here that you have to, for this to work, you have to put it from the high all the way to the low. So when using this, you can kind of see this is the resistance, right? It double topped here. It broke down here. If we're going to zoom in closer, it hit this level, it broke down, and you can see sometimes it bounces off of it, right? So you can see it bounced off this, right? Got close again, bounced, and then broke down, bounced again, right? It bounced right on that level again with the wick up above it, and then it broke down again. This is from all this, the pandemic going on. And you can kind of see here how it plays as resistance now, right? So this is a support. Now it's climbing back up, and this is the resistance now, and it hits the Fibonacci level perfect. Now it goes back down, almost makes a double bottom, pretty close to a double bottom, right? And now you can start seeing it play out, right? Now you can see it breaks above this previous resistance from here, and now it hits the second Fibonacci level. It doesn't break it, and it pulls back. And now we are grinding up slowly again. It's not always going to bounce off the Fibonacci level, but it's a very good way how you can start swing trading in the market. So I'm going to show you how you can actually use this to your advantage, right? So depending on your broker, you can have basically a stop loss. Let's say you think it's going to bounce off this Fibonacci level, correct? So you buy it here at the low of $7, and you put your stop loss right below it at $6.64. And that could go the same with right here when it broke through this Fibonacci level. You can have your stop loss right here at $18, and you can collect your profits at $27. Depending on your broker, you can do this pre-market hours. I personally like Webull. It's a really good way how you can start swing trading. Robinhood, I would say, isn't the best because, especially with all this volatility going on, it's usually after hours and not during the day that you will see all these big gap ups. So I personally like Webull because it allows you to make orders pre-market, which is like 4 in the morning, compared to Robinhood, which is 9 a.m. So Webull is a really good intermediate, more advanced broker if you want to use it, and they're commission free. So that's more or less what I like to do for swing trading, and you can basically do that and ride the wave up. If you think we're going to be bullish, you can keep riding the wave up for it. You can sell some positions here, and then when it hits the next Fibonacci level, you sell some positions here, and so on. Another thing that I like to use when it comes to swing trading is this moving average. What works best for me, all traders are always different, you know. Some strategies work better for others, but what I like to do is I like to use the 20-day moving average and the 200-day moving average. So you can use Thinkorswim. Thinkorswim is free to download, so you can just download this, make a paper trade account, and get more familiar with it. And I'm going to show you guys exactly how you can put these moving averages on your charts. So you're going to go here to studies, and you're going to go here to edits, and then all you're going to do here is type in moving average AVG, right? And then you're going to double click these, right? So by default, it's usually 9, I believe, but I like to change it to 20 and 200, and that I feel is like the sweet spot for me when it comes to swing trading and even day trading. So if you're day trading, if you're swing trading, then you might want to, depending on the chart you use, this is going to move differently, right? So if you wanted to day trade, this could work very well. What I like to do personally is I like to wait until these moving averages cross. Once my moving averages crosses aggressively, I tend to get in the trade, whether to be to buy or to short the stock. So it all depends on what you want to do. This works very well for swing trading, day trading, and even long-term investing. But if you want to swing trade, then it works perfect for that. So once you see these moving averages cross, we are basically bullish in the market. So you can take a position here once it crosses and start riding the wave up. And if you would have bought within this right when it crossed, right, and sold at the peak, which you could have used maybe the Fibonacci tool to get an idea, you would make, look, 82% in profit off that trade. And this was a very short time frame. Probably, you can see here, about just 2 weeks, you would have made 82%. Right now, the market is very, very volatile. So you can make a lot of money at this moment. Day traders love volatility. So keep that in mind. And I still think the Norwegian Cruise Line is bullish, just because, once we hit that 200 moving average, we did bounce up. You can see these moving averages are still crossed above. So I do think we were bound for a pullback off this big pop-up. The Feds and all this news coming out, that they're buying, they're putting money into the stock market. Until, we have a second wave and then nobody can really travel, then we might see a big, big tank for this. We might see it hit around the $7 mark again. It's very possible. We might see this moving averages cross, but currently we are bullish in the market for at least Norwegian Cruise Line. So that's why I like to use for swing trading, as well as the Fibonacci tool. And I'm also going to explain to you the RSI here. Just a little bit briefly, because this does work very good to get into a position. It's not always correct, but you can use all of these tools I mentioned above to just give you guys a more familiar picture. So you can see here that it's overbought with this RSI showing that it's above the line. Very overbought here. You can start selling positions. Once it hits this low side, you can start adding positions here. You can see how it's overbought here. You can sell positions. Overbought here. It was hitting the Fibonacci level, as well as you can see the RSI showing that it was overbought. It moved up so aggressively within a very short time frame. So you could start selling positions here. You can see it going down on the RSI. You can start loading up positions, and we are still right now trending kind of in the middle of that. So these are tools that I personally like to use when it comes to swing trading. Everybody uses different tools. If you want to use Webull, I'm going to have a link in the description down below. It's a great brokerage. I personally, when I downloaded Webull, I wasn't sure. I thought it was going to be another Robinhood, but it's a really good platform, especially if you're familiar with Robinhood and you know how it works. Then I encourage you to try Webull, because it's more intermediate and advanced, and you can actually use these charts as well on Webull. For Robinhood, you can't really use indicators. It's more of a beginner's platform, and when we have like a really big sell-off, you can see how Robinhood reacts, and usually the app won't even load, or like the website won't even load. So you have your money at risk when we see a lot of volatility in the market. So I personally would just try out Webull. You might like it. And also think about downloading Thinkorswim here. You can also download that one. That one's a free brokerage. You can make a paper trade account and just play with it and get more familiar when it comes to swing trading in the market. So hopefully this video helps you out, guys. If you wanted to get into swing trading, I personally like to use the Fibonacci tool. I also like to use the RSI and the moving averages of 200-day and 20-day. If you have any questions about this, leave a comment down below. I'll make sure to reply to them, and also make sure to like this video and subscribe. I'll see you guys on the next video.